Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 14th of September. I'm Phil Carroll.
And I'm Kevin Hornsby.
Season 11. Season
Wow.
11. More seasons now than Friends. How are you feeling, mate? Are you feeling chipper?
Friends, yeah. No, I'm feeling chipper. I think if you look back at season 1 and maybe season 2, boy, we didn't have a clue what we were talking about.
No. And some probably say that we don't know what we're talking about now, but I find that quite funny.
That probably is true as well. Maybe we still don't know what we're talking about. But anyway, we like to talk and give you a good understanding of what is trying to happen. But yeah, wow, it's been quite a ride, hasn't it? It's been good. Yeah. So, yeah, but I think there's only one thing in the news, and that's Charlie Kirk, mate. I'm sorry for saying it, but holy moly.
Yeah, I mean, that was on my list. I mean, obviously it's there for sure. I mean, staying a little bit closer to these shores, we've had 2 resignations, or let's say who knows, is it a resignation or is it a sacking? The first one started on the 5th of September when Angela Rayner resigned. I mean, last week Charles waxed lyrical, got on his soapbox about Rayner and the fact that she hadn't paid a stamp duty, or underpaid a stamp duty, should I say? Yeah. So the news finally came; it was inevitable. She underpaid 40,000 in stamp duty on an £800,000 flat, and with the PM's ethics advisor ruling that she did breach the ministerial code, her exit forced a major cabinet reshuffle, with David Lammy becoming Deputy Prime Minister and triggered a Labour deputy leadership contest, marking a significant blow to Keir Starmer's government. I mean, whoever advised her, I don't know who advised her, whether she just was meant to go to the government website to check the amount of stamp duty. Were you shocked that she resigned or not? Was it inevitable?
It was inevitable. I think the UK government's collapsing.
Yeah.
I mean, it's very simplistic. Look, obviously, I'm not in day-to-day contact with what's going on news-wise in the UK, but just from seeing what's happening, he's lost complete control. Starmer, and who is the Prime Minister right now? Because the way I look at social media, I'm looking at the Reform guy as the leader of the United Kingdom at this moment in time, because he's on more things than Starmer is. So
Farage,
I don't know.
It's certainly causing a problem. And then obviously later in the week there was the sacking of Peter Mandelson, as obviously UK ambassador to the US. On Thursday, after leaked emails revealed that he had called Jeffrey Epstein my best pal and advised him on challenging his 2008 conviction, with Downing Street saying the extent of his ties to Epstein made his position untenable. So, I mean, that's a shocking position to be in, isn't it? Being best friends with Epstein. I mean, could it get any worse?
No. Hence the reason why he's gone.
Yeah, it's been sacked. So, and then as you said, Kev, I mean, the tragic news of Charlie Kirk, 31 years of age, fatally shot in the neck on the 10th of September while speaking at a Utah Valley University during an outdoor Prove Me Wrong event, part of his American comeback tour. 3,000 people were in attendance in the crowd, and obviously the shot came from a rooftop of a nearby building, believed to be about 200 yards away. Authorities recovered what they think is the weapon, a high-powered bolt-action rifle from nearby woods, and released video of a person of interest fleeing across the roof. The suspect right now remains at large. So sad news. I mean, obviously, I don't know if you saw, but on X there was actually videos of it going round, which you kind of couldn't help, they stumbled across, which was shocking to see. I mean, tragic. I mean, this guy, I mean, I'd never really listened to him, but I had seen a few of his interviews, or these Prove Me Wrong debates, where he's absolutely launching into people and people are launching into him. He was a divisive character, wasn't he?
He was divisive, yes, but the theme of what he was saying was pretty straightforward, and he'd been doing it for a long time.
Yeah.
People didn't like it because it wasn't what they believed. And he's paid the ultimate price, and it is extremely, extremely sad for his wife and his 2 kids. I think that the amazing thing that I see is that I think that somebody shooting him in this way is actually going to be a multiplication of his views.
Yeah.
I think his views are going to be multiplied,
Sure.
both from him and from other people who are going to stand up and say what they think. Some of these things, as far as I'm concerned, and as far as I think the majority of people think, I've been completely mad, completely
Yeah.
insane.
Yeah.
So yeah, I don't mind saying I'm a conservative, because I am effectively in terms of those views. I didn't agree with everything he talked about, that's for sure, but it's very hard to find someone that you will agree with completely about everything, because
Absolutely.
it's not the case, you know. He was very much pro-Israel. I listened to a thing with Candace Owen, and Candace Owen came out and basically said she didn't agree with what Israel were doing. That was against him, because the two of them basically came up, Candace Owen and him, in a big thing. And I would tell you to listen to the podcast that Candace Owen did. It was like, ooh, it's a real heart burner.
Yeah.
But you know, because I don't agree with his views on Israel for sure. Because I think we're talking about two different things. We're talking about the state of Israel as opposed to the Jewish people, and that's completely different. But anyway, without getting political, you know, to literally be shot in cold blood like this in supposedly a safe state in the USA. I mean, God forbid what's going to happen next.
Yeah, absolutely. Okay, well, let's move on to our first guest this week. He's joining us for the very first time on the roast, Paul Welch, Chief Executive at Buccaneer Energy, formerly Nostra Terra. The company recently rebranded as Buccaneer to mark a fresh chapter, and they've just announced a £600,000 fundraise backed by institutions, directors, and new investors. The money will be used to drill 2 new development wells in the Fuke area of East Texas, a field that's already producing strong oil rates. Alongside this, Buccaneer is exploring an innovative gas monetization strategy, looking at powering Bitcoin mining operations with their associated gas, a move that could turn a challenge into a revenue opportunity. With fresh capital, new branding, and a bold plan, it's a great time to welcome Paul to the show. So, Paul, this is the first time we've had you on the show. Welcome.
Oh, thanks. Sir. I'm looking forward to it. Very pleasure to be here.
Okay, yeah. So what was the thinking behind the name change from Nostra Terra, and, you know, what brought you to Buccaneer?
So what brought me to Buccaneer is I came onto the board of Nostra Terra about 2 years ago at the request of the Nomad to try and kind of rejuvenate, help the business. And I was on NED for a couple of years, and then we recognized that probably wasn't going to work out too well. So in May of 2024, there was this called a regime change, a management change, and so I became the CEO. And so at that point, we really set about to kind of recast the business. You know, we sold some assets, we paid down debt, we cut operating costs, we basically got the business profitable again. And that's how it all came together. The reason for the name change is that, you know, Nostra Terra has been on AIM, or been around since 2005. Because of some of the things and some of the share price performance and things that were done in the past, we felt it was a time to make a clean break. So about 6 weeks ago, we changed the name to Buccaneer Energy. Buccaneer was also the name that we operated under in Texas, where we have most of our assets. So it's kind of a natural fit to change it to Buccaneer. Our PR, IR companies weren't too excited because they felt that Buccaneer was a little too close to the wind, you know, it was a little too swashbuckly, but we kind of convinced them that we thought it was the right thing to do. So that's why we changed it to Buccaneer, and we're super happy with it. We like the name. We think it kind of puts us in a position where, you know, we're doing the right thing, and we're kind of pushing the envelope, and, you know, we're going to take some chances. You know, we're not always going to be successful, but we think it's a business that requires you to take on an element of risk to be successful, and that's what we intend to do.
Yeah, Buccaneer always reminds me of the famous RAF fighter jet. You know, the fighter, the Buccaneer. It was a fantastic plane. I always remember watching it as a kid. But tell us a bit more about the assets which Buccaneer holds there in Texas then, and, you know, what are their current production rates?
So we have 3 groups of assets in Texas: East Texas, West Texas, South Texas. South Texas is in the sale bin. We probably make about 5 barrels a day there, so that's not something we're going to talk about in any detail. West Texas, we had a number of assets, and when I came on board, we sold a big chunk of them. We have one remaining asset that is, I'll call it Steady Eddie, produces about 10 barrels a day, really rarely declines, very good cash flow, very low OPEX, and so we hung on to that. And then we have our primary asset in East Texas called the Pine Mills Field, which has the Fouke area that you mentioned up front. That produces anywhere between 120 and 185 barrels a day, depending on the day. And so that is where we've kind of focused our energy since I came on board. We invested in a workover program that had 2 phases, and essentially we took the field that was making about 50 barrels a day, and now we're making, on a good day, about 120 from that field. And that field was discovered in 1949, so it's been around for quite some time. It's pretty well understood. It has about 35 million barrels in place, and we've produced to date about a third of it. And we think we have about, given the quality of the rock in this area, we think we can produce about half the barrels. So we have another 6.5 million barrels to be produced in that asset. And again, it was discovered in 1949. So the interesting thing about that field also is that this is a field that's a long field. And in 2018, we shot 3D seismic over it. And when that 3D seismic was interpreted, we found that there was part of the field that had not been touched yet, basically hadn't been drilled. And so in 2021, some 70 years after the field was discovered, we drilled a well, and we found that it came in essentially original reservoir conditions. So an average well in the Pine Mills field makes between 6 and 20 barrels a day with a lot of water. This well came in at 140 barrels a day dry oil, right? So our operating costs there are, like $5 a barrel. And so in 2022, we drilled the second well, same thing. And now in 2025, we're going to drill 2 more, and we expect the same thing here. So these wells, we expect to come in at 120 barrels a day, produce dry, clean oil, and our OpEx is, essentially less than $5 a barrel. So it's a hugely profitable opportunity for us. So those are the kind of things we're looking at. And then the next part of that story is that because this is a separate reservoir section from the main part of the field, it produces some associated gas. And so the reason we kind of delayed getting these wells drilled until now is that associated gas initially was relatively small amounts, and we used it in field operations and did certain things with it. But as the field has produced and the pressure has dropped, the gas amount has increased. And so we expect when we drill these 2 new wells, we're going to have more gas than we can just essentially vent or flare or do something with. And so that's where the idea of using that gas essentially to power a generator to then power Bitcoin mines and allow us to essentially take a waste product and generate revenue from it came together. So that's kind of the next step in the process. After these 2 development locations are drilled, we're going to put in a Bitcoin mining operation and generate some cash from something that would be lost or vented to the atmosphere. So we think it's an excellent solution for that.
Yeah, it seems like a great opportunity. So you completed this 600,000 fundraise to drill these 2 new development wells in the Fuke area. Could you just walk us through the potential upside in terms of additional number of barrels a day that you could potentially add if those wells deliver as expected?
So everybody's clear. Before I was involved in the Fouke area, the company farmed out that portion to another operator, and the operator drilled the well and was successful. The company was carried on it, but the sacrifice or what we gave up for that is that we only have a third of this right now, and the operator, our partner, has 2/3. So these wells will come in at 120 barrels a day each. The total then will be 240 barrels a day. We'll have a third of that, so we'll get 80 net barrels a day from these 2 wells. And again, from a cash flow perspective, kind of on a monthly basis, that should add another $100,000 a month, something close to that, maybe a little bit more in revenue for us. So it's really an important opportunity. And again, the other thing with these is because these wells are relatively cheap, they cost $1.1 million to drill and complete. The payout is about 6 months, and the rate of return is north of 300%. So these are the type of things that we like to invest in every day if we can find them. But thankfully, we have 2 opportunities here we're going to invest in straight away. So that was the attraction for people that were investing in the company at the time, is that this is the kind of thing we expect to see. And so as a result of that, we'll increase our production, by almost 40%, and our revenues will pick up.
Yeah, and how easy would it be to increase the, using some sort of fracking and to increase it? Because it seems like it's quite a low barrel. Even if you got to 500, 600, 700, that would be quite a good number. So is there any ways you can increase the flows?
Yeah, no, from these wells, we can't increase the flows above the number I've given you, which is 120 barrels a day, for 2 reasons. Firstly, the quality of this reservoir we're producing from in this area is fantastic. So if you think of like these unconventional wells, when people drill these long horizontals and they frack them, you're producing from something that has the consistency of cement, right? Really hard rock. You got to bust it up. You really got to put a lot of energy to make it flow. Here, we're producing from the equivalent of beach sand, right? So this has permeability of a Darcy or 1100 millidarcy. So it is an excellent quality system We don't need to frack it. We don't need to do anything to it. We just drill, basically put a straw in it and it comes out in a higher rate. The reason that we can't go above 120 barrels a day is that in Texas, there's a thing called a field allowable. And so you have to go to the regulator, which is called the Railroad Commission, petition for an allowable rate, which they define as the maximum economic rate. Originally, when we were drilling the first wells, that was set at 80 barrels a day. And we subsequently petitioned that, and we asked for 140 barrels a day, and we got it up to 124 exactly. So the maximum we can produce is 124 barrels of oil per day per well. So that's why there's really no upside on those wells beyond what I've mentioned, other than additional locations. And so once we drill these two, we'll see if there's more out there. But at the moment, we're kind of capped. That's the high end, and we expect to hit that. There's no doubt, because the first two wells we drilled were flat at that rate for almost 2 years, and then declined because we had some issues with the wellbore. But the last Falc wells, the current wells, are producing flat at 100 barrels a day combined since May of 2024. So we know we're tapping a much bigger system. And so, that's where we are. Now, we do have upside, in other parts of the field through workovers and stuff like that, but these wells are capped at that rate.
Tell me, Paul, what is the possibility to drill another 2, 3, 4, 5 wells on this same field? Would you need permission to do that? How would that work?
Yeah, there's opportunity there. So what makes this field interesting is that, as I said, the area, so Pine Mills is a big, long field. If you go to the website, you can see a picture of it. The area that we're drilling in Falc is this kind of fault block in the southwest corner of the field. There's a bounding fault that separates this area from the main part of the field. And the length of that fault is what's going to determine if we have other locations. At the moment, we're convinced, 100% convinced that we have 2 locations. The fault continues to the north. We own the acreage to the north as well. So if these 2 wells are successful and they come in like we expect, then we have the opportunity for at least 1 and maybe 2 more locations to the north above us. So they could do a similar thing. But we have to drill these first 2 wells to see if it's going to work out. But as I mentioned up front, we have this whole thing covered in 3D. So there's not a huge amount of uncertainty there. So when we talk about a development location, it's a true development location that has, chance of success in, above 90%. So this is not a rank exploration type opportunity.
And would those other ones be involved in a farm out, or would you be able to take 100% of those if you?
No, they'll be part of the same farm out. Now, our partner there is interesting in that they are a private company. For the most part, it's family money. I think that they're getting to the point where they probably would like an exit. So, it's probably something that we would look at doing, given success there, taking them out and just running it ourselves. Had I been in the seat when we had originally doing the farm out, I probably wouldn't have farmed it. I would have drilled the wells myself, but you have to play the cards we're dealt. So at some point I would like to take them out and just run this 100% myself, but we'll see where it gets.
Yeah. Okay. So if this is the position, we've got basically, as it stands at the minute, you've got Buccaneers, and we were talking about, where Buccaneers come from. You should go and drill some wells in Tampa Bay, because that's where the Buccaneers are. But we've got a small oil play with small number of barrels as we speak. But based on everything I've read, your target is 3,000 to 5,000 barrels of oil within 3 to 5 years, let's say. And I think the cherry on the top would be the gas in terms of the Bitcoin. That's going to produce not a huge amount of revenue, if we're honest. I mean, based on what you told me, it was going to be maybe $10,000 to $12,000 a month, which is not insignificant. It will cover the running costs of a business for sure. But how are you going to move from where you are now to 500, 1,000? Because it's not going to be just this field, quite obviously.
No, it's going to be a combination of essentially 3 things. So it's going to be the development of the Falc area, which we're very well on our way of doing. It's going to be completion of the behind pipe potential in our existing Pine Mills asset. So what I didn't mention up front is that the Pine Mills field, discovered in 1949, has 4 producing horizons contained within it. The majority of the oil to date has been produced from what we call as the sub-Clarksville, which is kind of in the middle of the band. But there are other horizons, uphole and downhole, that have yet to be produced. So we have a technical team at the moment working on looking for behind pipe potential. And so that will add, potentially, let's say another couple hundred barrels a day if everything works out. But then the next step will be, adding assets to the portfolio. That's what's going to have to happen. Now, in the current oil price environment, there we are sub, $60 a barrel in East Texas because we take a bit of a discount due to the quality of the crude. And a lot of people aren't paying their bills, right? There's a lot of people who just can't make a go of it at this point. When we came on board, we took every single cost out of the system we can get to. So our break-even price, is $25 a barrel, all in, everything. That's where we start making money. So we're positioned well to go pick up some other opportunities out there. And we think that's where it's going to come from, one. And then two, there are parts in Texas that haven't been developed because the focus has been on the unconventional. So people drilling, in the Permian, long laterals, 10,000 feet long and 6,000 feet depth, costs multi-million dollars to drill these wells. There's a lot of the basin that isn't set up for that. It's gassy, it's unloved, and people aren't really doing that well there. And that's where we see the combination of adding the Bitcoin mining to conventional oil production to essentially improve your returns in areas that, in the past weren't doing that well. So in the low price environment, assets are cheap. We need to get a move on, pick up new assets, and then implement the strategy of monetizing that gas, developing what we can in these older fields, and then, moving the story forward. So we're looking at picking up, chunks of 200, 400, 500 barrels a day to get there. Now, there's hundreds of deals out there, and you got to find the right one, but that's what we've been doing. We've been churning through them, looking for opportunities. And I think as we spoke when we first met before we were on this discussion, we had an asset that we agreed to, we closed on it. We literally had a press release from the seller, the deal's yours, and then the other party in the asset had 30 days to make a decision. Day 28, they sent us an email saying, "Listen, we want to take this from you," right? And so, that was 300 barrels a day that we could have added to the portfolio, last month, but we didn't do it. So we're confident that we can find these opportunities. We're confident that we can develop them, but we need to get out and find some other ones.
Yeah, I just want to touch a little bit on the whole Bitcoin, the gas monetization you talked about, because I know that you said in the past you'd appointed Uphold as an independent blockchain and digital asset advisory firm. And I think you said you'd had initial discussions with Bitcoin mining operators, but there was no sort of formal partnership that had been signed. Just talk us through, how potentially close you are to sealing a deal with a Bitcoin mining operator. And then I want to sort of break down on how actually it is that the gas, which normally would either be stranded or maybe flared, is actually fed into, small mobile gas generators, presumably that are placed on the well site so that you can then run your Bitcoin mining operations from the ground. Is that a fair summation of how it would work?
Yeah, basically. I mean, so let's just go back and talk about advisors. So we've appointed Uphold as our Bitcoin advisor. So that, what that means is that they are in touch with a number of the Bitcoin miners. They're in touch with all the people who handle Bitcoin. We have proper procedures in place. We set up a treasury function, all these things that need to be done, all the documentation and everything to handle, anything we produce is set up now. So that is done. So that's what Uphold is there to help us to do. With regard to the Bitcoin miners, we had a lot of, so just if we take a step back, Bitcoin mining is new to, let's say, the UK potentially, but in Texas, it started in 2022 in a pretty robust fashion. So there are specialty companies that provide the miners, the mining machines, the generators, and that sort of thing. So if we think about the process, essentially what we're doing is we have gas that's produced associated with the oil. We then take that gas, put it into a generator, and we generate power. Now, we do that already in our operations. And so the next step in that process is to essentially connect that power to a number of PC-like devices and then cool them down, and then they mine for Bitcoin. And so that's the process. And we do it right on location, because we use, internet connectivity, through the cloud. So we don't need any lines, we don't need anything. So it's, essentially we're monetizing gas without a pipeline, which is the key. Because if you can't put gas in a tanker and haul it away. You've got to put it in a pipeline, and pipelines are $1 million a mile, right? And so it's very expensive. So this operation allows us to essentially monetize that, and that's what we'll do. So it's not a big extension of the business, because we do everything up to the point of, mine for Bitcoin. Now, Bitcoin and the way the whole thing is handled, and it's a specialty thing, but because it's been done in Texas since 2022, there are contractors out there that can help you through the process. So the way we looked at it is that we'll get involved in the parts of the value chain where we think we can make the most money. And if we have to do it all, all the way down to having the Bitcoin on location and keeping it cool and generating the corner cells, we'll do that. If we just sell power, we can, we think we can make money, we'll do that. And if we just sell the gas, we'll do that too. So we have yet to decide where we're going to be, but we're going to be capitalized to the point where if we don't think we get a good deal on any one part of that chain, we'll do it ourselves. Right? So we can drive the best bargain, for our shareholder. So it'll send. So we've had discussions with everybody. What we need to do in this first location, which will be in East Texas, is prove we have the gas, test the gas, make sure we have the deliverable volume, and then we'll kick it off. So we look at it as kind of a first quarter 2026 type of opportunity for us. From the gas perspective, we've had samples pulled from the current wellhead, so we know we have the quality of gas we need to drive the process forward. It's now we have to ensure that we have the volume. So that's going to come with the drilling of these two development locations.
If we're looking at the future and we're looking at barrels of oil, if we go with a $25 margin on a barrel of oil, and we have 700 barrels per day, if you manage to get a few more deals, which I'm assuming isn't a million miles away, let's say 6 months, 9 months, whatever, yeah. You're looking at having free cash turnover of $6 million a year, okay? Which I presume means you're going to be able to escalate this pretty quickly. Now, the question I'm posing is not that, but the question I'm posing is, at the minute, looking at your books, you've got a 4.25 million loan with a bank, Federal Reserve rates, which is obviously pretty reasonable. And if interest rates start to drop, it's going to be even more reasonable. How is that bank looking at that asset, at those debts? I know it's over 3 years, but how was the previous one that didn't happen going to be funded? And how are the future ones likely to be funded?
Okay, so that's an excellent question. So let's just start with the debt we currently have. So it's 4.25 million. It's at the Wall Street Journal rate, which is indexed to Fed funds rate. So it's, at the moment, I think we're paying roughly 7%. It's, we're only paying interest, so it doesn't amortize. It's 3 years. And we just renegotiated the terms back in January of 2025, so this year. Our bank is one of the most supportive banks I've ever worked with. They want us to grow. And so when we were talking about that opportunity that I just mentioned, essentially 2/3 of it was to be financed through the bank and 1/3 through equity, right? And so, if you're paying, let's just call it, even if it was increasing, let's say we're paying 7.5%, on our money to do this transaction, and the rate of return that we're looking at on these, on a bigger asset is between 15 and 30%. It's a fantastic way to go. It's a great opportunity, and that low cost of capital, it increases our rate of return, right? So it's on our equity. So it'll be a combination of equity from the market and debt from our lending bank. And, we are more than tickled with how they've been treating us and how easy they are to work with. So it's a fantastic bank. In fact, one deal that was brought to me was with another onshore producer in the southeast part of the U.S. who was paying something like 19% on their loans, and because they had taken them from a private equity house, and they were going to then we were going to merge and essentially refinance all their debt and cut their costs tremendously. Now, we tried to do that transaction because it was it looked like it was going to really work out well, but then we found out they had a bunch of issues with their takeaway of their gas that wasn't going to work. So anyway, that relationship with the bank, from my perspective, is another competitive advantage we have because they're very supportive, and we've had a long-term relationship with them over the last 5 years. And so we see it being beneficial moving forward. Now, from a current cash perspective, we're generating north of $200,000 a month in revenue. Our debt service at this point is something like $28,000 a month. So, from a capital perspective, it's not a big burden, right? So it's not amortizing, so it's really not a problem. Now, unfortunately, that capital, that's sitting there isn't really doing us much good because it was spent on previous, assets or previous opportunities that probably weren't the best return. But it's from a pure cash flow perspective, it's not a big deal. And having them involved in the process is really helpful in making bigger acquisitions. So we're happy to be working with them.
So from the perspective of looking at the future and the growth, I mean, I just see this as, if you get to 2,800 barrels. I picked that just because I can do the maths easily. Basically, you're looking at somewhere in the region of 25 million of free cash flow per annum. Now, I look at other companies that have done this in America mainly, and I see, is it Diversified Energy? So, I mean, give us a playbook in terms of what they've done. I mean, they're literally thousands and thousands and thousands of barrels a day now, but they have done a similar playbook to you guys, I'm sure.
Yeah, they have. I think that they were. I think that might have been slightly focused. They were early to the thing, and I think they got some good deals. They kind of went after it when the oil prices were low the last downturn, and I think they really put together a business. I think there's an opportunity out there to do that again. I don't know if we can replicate the same success, but the opportunity exists. Again, we're in a low ebb of pricing. We think there doesn't seem to be much catalyst to the upside. If you look at what OPEC is doing, they're putting more and more barrels on the market. The current political regime has kind of staked their reputations, but they've kind of staked their claim that they're going to keep inflation low. And one of the ways they do that is to keep the oil price low. So we don't see any real upward push on the oil price in the near term, and we think that is a great opportunity for us to buy.
I mean, I see actually the oil. I mean, this sounds absolutely counterintuitive, but if the oil price becomes under pressure, I believe this business is going to do extremely well, which is bizarre, but actually that's actually what I think could happen.
Right. So, I mean, come back to the numbers, our OPEX to cover our costs is $25, but our net, so at the current prices, our net profit per barrel is $40 in Pine Mills. And again, if we run at $65 a barrel and in the area where we have very low costs, it's $58. So the margins are big. They really are big. And they're, so when we crank through the numbers, those are the kind of the multiples we think we need to look at. I mean, we keep our costs low, as long as the prices stay, if the prices drop to like, $45, $50 for a long time, that would crush many people. And that would be the best time to go out and buy things because, again, our operating costs are low. And, when the whole industry is in a downturn, then your service costs tend to, decelerate a little bit as well. You can cut better deals. So it's, I think it would be a good time now. No one wants to look at a downturn in price, but if there was one, we would definitely make a move and buy as much as we could, for sure.
Yeah, and the reality is it's almost like house repossessions. Some of this stuff has got to be in the place where it's going to be taken over by the banks because they're not basically going to be able to maintain it. And then the bank just wants it off its books, so they're going to sell it on cents in the dollar.
Yeah, the banks definitely don't want to operate, and so the banks, and we'll bring them to the clients that have been paying their bills and good operators. Now, I mean, operators, take loans and do stuff all the time, and 90%, 95% they're successful, but there's a lot of times they aren't. When these downturns come, people aren't predicting or aren't ready for it, and so it can hit everybody pretty hard. But that's where the relationship with your banker is key, because they will give you the an early nod, like, hey, you might want to look at this because we think they're in trouble. And so those are the kind of things that we get tipped on, and we'll go talk to the operator or go look at the asset and see if it's something that would work for us.
Based on Texas, what's the sort of the norm or the probability of gas coming out of these things so that you can replicate the Bitcoin side of things, the mining?
Yeah, I would say that Texas is very well understood. There's been hundreds of thousands of wells drilled, so I mean, there's not too many surprises there. Most places that you produce oil, you're going to produce gas. I think where we do see opportunity is in, as I mentioned up front, in the unloved parts of the Permian where you have more gas than there is takeaway capacity. People haven't been aggressively developing it. So, if we have an oil field, typically it's been developed on 40-acre spacing or 80-acre spacing. Nowadays, when you would develop an oil field, it would be down to 20-acre spacing, even tighter sometimes. So what you would typically do is pick up an oil field that was developed on 40-acre spacing. You would downspace it, so you drill infill locations, and that's where you'd find additional pockets of untapped potential, and then some gas zones that probably haven't been drilled in other areas. So I would say almost anywhere you drill in Texas, you would find associated gas, and you can implement a Bitcoin strategy if you don't have takeaway capacity. So it's, as I mentioned up front, since 2022. It's been aggressively pursued in Texas. So it's something that people really understand well. And so as a result of that, when something's well understood, you have multiple contractors that are in the space. And so you get really good pricing for the things you need to develop it. So it's a great place to do this.
And is Texas basically one big oil field, or is there certain areas within Texas that has the oil?
Yeah, I mean, it's Texas is a big oil producer. It has many different basins. So there's like, let's say there's probably three primary basins: the Permian Basin, which is the biggest one in West Texas; the East Texas Basin, which has the biggest had the biggest onshore domestic field, the East Texas field, and then you have South Texas, which is predominantly a gassy area. So I would say not all of Texas, but a big chunk of Texas has oil and gas, and it's in various shapes and form. Whereas you have in West Texas, you have poor quality rock that you need to frack and stimulate and do all sorts of stuff like that. East Texas, the quality of the rock is spectacularly good, so you don't need to drill horizontal wells or frack them. And South Texas is kind of a combination of the two, where you have oil and gas. In some of it's tight, some of it's not, but you probably need to stimulate it. So depending on what part of Texas you're in, it'll dictate how you operate and how you develop your locations. But it's very well understood. And Texas itself is big, as almost as big as all of Europe. So I mean, it's a huge.
Yeah. No, I understand Texas is a very big place. So we are currently focusing on East Texas, and I assume that you're going to try and get more in East Texas because of the things that you talked about.
Yeah, I think our focus is going to be on both East and West Texas. And the reason I say both is that East Texas, we understand really well. We've got infrastructure there, so it's easy to add stuff to it, relatively simple. In West Texas, the same way. West Texas has a lot of opportunity just because of its sheer size. There's just a tremendous amount of number of operators out there, and the scale of the basin is so big. So we'll look at both. I think we'll probably won't do too much in South Texas, but we'll do a lot in East and West Texas. Those are the places we're looking at for opportunities these days.
Yeah, just to put it in perspective, apparently there's 175 to 180,000 active producing oil wells in Texas alone, and it accounts for over 40% of the total U.S. crude oil production. So there you go.
That's a lot of nod and donkeys, or whatever.
It is, yeah, and he says most of them are only pumping less than the stripper wells, which produce less than 50 barrels a day anyway. So
yeah. So I mean, I think basically it's almost like a cleanup game, isn't it? I mean, and maybe this happens in cycles in this place as well, because it is like a pincushion and people are going to be trying to get the best deals. But if you're in the wrong place, and I presume there are lots of, wrong to call them mama and papa deals, but basically there are people pumping stuff that don't have much background in terms of doing this. They're just going in and saying, I've got an oil well and I'm pumping the stuff. And when it's $100 a barrel, that works very nicely. Thank you very much.
Yeah. I mean, I think that's the case. When the price is very high, it covers up a lot of sins. And when the prices drop, then you see who can really focus and operate. And I think we're kind of not quite to the bottom of the cycle, but we're pretty darn close. And so a lot of people are struggling. That we're doing quite well at $100 a barrel. I mean, I think everybody would be doing quite well at $100 a barrel. For the unconventional guys in West Texas to really make money, you kind of need to be north of 65 or $70 a barrel, to kind of make money from what you have. And then to drill new wells, you probably need to be above that, and where we are at the moment in East Texas, we can generate tremendous amounts of profit at $55, $60 a barrel. So we're in good shape there. So that gives us the opportunity, I think, to go out and look for opportunities. The other thing too is that when there isn't much demand, so we don't have lots of drilling, the rig count is down, prices for these services also drop because people want to, keep these things running. So, you don't have to pay a premium to go out and pick up a rig, or you do have to pay a little bit higher prices for pipe and certain things these days because of the tariff structure that's in place. But that hasn't been a huge increase in cost. But, again, because we're in a lower price environment, most of our service company costs are very reasonable these days. And so it's a good time to do business.
Okay, very good. So if I was to transport you 1 year ahead and 3 years ahead, where is Buccaneer Energy going to be?
So I think 1 year ahead we'll be over 1,000 barrels a day. 3 years ahead we'll be 2,500 to 3,000 barrels a day. That's what I expect. I expect that we will increase kind of geometrically. And the reason I think that is that, when you're smaller, it's difficult to do larger deals. And as you grow, the deal size you can do increases. So I think we'll start slow with 100, 200, 300 type barrel a day opportunities. And then as we build up momentum, we can tackle larger and larger sizes of opportunities, and also deploy capital into areas that we've purchased and then developed them better. So those that's what I would expect. And then I think by year 5 we'll be peaking around 5,000 barrels a day. That's right.
But actually, because of the market capitalization of the company at the minute, sort of £2.5 million or less, actually 2.4, you're looking at an exponential share price growth, even doubling the number of barrels. It's going to be, it's obviously going to be some pretty stellar growth. If the things you've just said, over 1,000 barrels a day in a year from now, you're talking about probably somewhere in the region of $10 million of free cash per annum. So there's got to be a good chance at that point that you're actually not even going to have to borrow to get the deals done after that.
Yeah, that's a position we'd like to be in as well. Now, the other part of that comes to if you put Bitcoin on your balance sheet, you can then lever against that, so you can kind of create your own lending base if you'd like, to do that as well. So we'll see. But again, the best thing any company can do is invest their free cash into new assets and growth. So that's the position we need to be in, and that's what we're headed towards, right? So all of our growth will come from our internal cash flows. Ideally, that's what we'd like to do.
Yeah, and if you're internally growing at probably more than 100% a year, which is what you've just suggested, then why the hell wouldn't you reinvest it all? It makes a lot of sense.
Yeah, I mean, again, I did a presentation a couple of days ago, and people asked me, are you going to pay a dividend? I'm like, well, I'm not sure that we're going to pay a dividend. And if I have opportunities and the reason I say that is because if I have opportunities like the Falk area where I have a rate of payout in under 6 months and a rate of return of north of 300%, that's where I'm going to put my capital. I mean, that's the best thing for the show.
No, we Paul, I tell you now, we don't want a dividend. That's what you're going to do.
Some people like a dividend, but I like share price growth. What we really focus on is cash flow growth. That's to me the most important metric.
I think if you get to 5,000 barrels a day, and effectively based on those numbers, you'd be in the region of 125 million of free cash flow. I'd want a very nice, tasty, big dividend, and you'll be very happy to give it, I would imagine, at that stage.
It certainly would be.
We're not in a situation where you would want to go to 10,000 maybe, or somebody swoops in and buys the whole thing. But that's for another day maybe.
Yeah.
Okay, so we're going to ask you the roast questions now. So the first question is, what is a Sunday roast in the Paul Welsh household?
Okay, so
as a man who lived in London for many, many years as well.
I can give my answer. I'm assuming that my wife won't listen to this, but so in the Welch household, it's barbecue. I've got to say, we're not going to be a traditional UK household here. We like barbecue, so we will do barbecue out on the grill. That's our thing. So typically,
you're in Texas. I can't really expect anything
it's going
different.
to be brisket. It's going to be brisket, or it's going to be pulled pork. But those are the things that we would have on a Sunday. And maybe
excellent.
An icy cold beverage to wash it all down with.
Okay, well, I look forward to having a Texas Roadhouse barbecue when we come to site and see all these nodding dogs. It would be interesting.
Donkeys.
Not in donkeys, sorry, not dogs. But yeah.
Yeah, what's the best advice you've ever heard or received?
I think the best advice I ever got, and this was when I was working at Shell, was watch your data. Make sure you understand your data, collect your data, trust your data, examine your data, and use it as your best source of insight to making decisions. It sounds a little bit engineering and kind of esoteric, but as long as you can focus on the fundamentals and you have the data to back it up, I think you rarely make a bad decision. And so that's kind of the way we've been operating. So every time we take over something, we look at an opportunity, we see, what's our data set, what's our data telling us, where are our data holes, can we plug them? If we can, what does that mean? And typically we're looking for ways to, enhance the data set so we can generate additional cash opportunities. And so we really focus on the data. So, mind your data.
Very good. It's almost like the measure twice, cut once, isn't it?
Similar thing. I think it's part of the engineering version of that. And having PS.
And the same question, Paul, but it's not about work. What would be the best piece of advice you've ever had?
It's just never give up. Never, no is just, a stepping stone on the way to yes. You got to ask a couple times. You got to keep pushing. We've done acquisitions where people have been appalled at the prices that we've initially offered them. And we just kept going back saying, listen, we think this is right. This is why. This is what it's based on. So we don't really like to take no for an answer. So we keep pushing.
Very good. Well, we look forward to speaking to you in the not too distant future when you come up with the next deal. And thanks for coming on the roast.
All right. Thanks for having me. Really enjoyed it.
So our next guest is delighted to be joined once again by Callum Sommerton, CEO of CHLL Brands. It's been another busy period for the company with two big announcements in quick succession. First, CHLL has been appointed the UK master distributor for ELF nicotine pouches, a fast-growing reduced-risk product that's expected to carve out a major share of the £200 million plus nicotine pouch market. Then, just a few days later, the company unveiled a strategic partnership with SYP Global, who are developing a pioneering new nicotine delivery system that could reshape the entire category. Both moves highlight CHLL's strategy of using its CHLL Connect network to bring innovative products into the UK market and position itself at the centre of a rapidly expanding space. It sounds like you've been very busy, Callum. Just tell us more, please.
Yeah, so I think the first thing to say is that as compared to when we were last on the market before we returned in August 2025, we're no longer a business that is focused on the development and the sale of only our own brand, but we're focused on the sale of a basket of brands. We're a service provider to the nicotine industry, but also to other consumer packaged goods industry products. This is clearly a landmark deal for us. They're a huge name. Anyone who has sort of any finger on the pulse of nicotine tobacco alternatives will have heard of them. And in reality, this is a bit of a coup for us because we are punching well above our weight. But to sign a partnership of this gravity and this nature shows that people respect and believe in the fact that we've done this for ourselves with our own brand. We know what we're doing. We've been there. We've done that. We've got the t-shirt under our own steam with our own or with our investors' money, in fact. And they rate the fact that we're able to use that lived experience to navigate their path through and give them a route to market. So it is very significant. It certainly gives us a degree of clout. It will help us open additional doors, both for those products and also for the other brands we carry in that wider portfolio. But really, look, the opportunity is huge. We've referred to the size of the pouch market in the UK, and the focus with this deal really is pouches. It's a very new industry. A lot of people talk about its promise. It's been absolutely flooded with entrants that are very small in recent months because they're seeing this as another sort of vape boom. But we're starting to see consolidation. We're starting to see consumer uptake now. The sort of Wild West days of the nicotine pouch game are coming to an end, and now it's time for the bigger players to come in, take market share and consolidate. I think in this partner, we've got exactly the right one to do that.
Sounds good. Yeah, so you also announced the partnership with SYP Global as well, who are developing this completely new nicotine delivery technology. What attracted you to this opportunity, and how do you see CHLL helping to bring such a novel product to market?
Yeah, I've been speaking to the guys at SYP since the very beginning of this year. They have spent a number of years now, or at least the inventor behind this, Christoph, has spent a number of years crafting what is a very, very impressive, very novel, delivery system that is unlike anything that's on the market today anywhere in the world. This is not a technology that has been commercialized by anybody else. I can't go into too much detail about what it is because we're in the process of finalizing additional patent filings. But what I can say is, look, if you think that combustible cigarette is dangerous because of the tar, because of the combustion and the carcinogens and other chemicals that are added, a vape is considered largely the conventional statistic is 95% safer than a cigarette. We never say that they're completely safe. We never say that there is no risk in using a vape. And the reason for that typically is because while it's much safer than a cigarette or a combustible product, it involves the heating of solvents, vegetable glycerine, propylene glycol around a coil. That coil is typically made of metal, and that produces your aerosolized vapor. That's great, and it is significantly safer than a combustible product, but it still results in you inhaling aerosolized solvents. There is a degree of heavy metal issue there where it's going around that heating coil. And while those products are safe, they're highly regulated, they are very, very stringently tested, at least if you're buying a brand that we stock or another legitimate brand. Of course, it's not risk-free. This product doesn't involve heating. It doesn't involve a heating coil. It doesn't use solvents. And what it does is delivers a Simple, nicotine-infused mist that can be metabolized orally, it can be metabolized in the lungs, and that is absolutely critical. And the reason that's critical is if you can inhale your nicotine, if you can take your nicotine into your mouth and still get it into your bloodstream, you can capture market share from the pouches, you can capture market share from vapes, and you can go forth and effectively provide a system and a service, both in the nicotine space, but also on a wider level with other applications, potentially in the administering, I don't know, other medical active ingredients to, all sorts of people in all sorts of settings globally. And that's really the opportunity I see here in SIP.
Yeah, absolutely. I think it's now pretty apparent that you've got the distribution rights for some of the most, recognized names in vaping and nicotine alternatives, and you're also aligning this with the, this new cutting edge innovation, as you've just explained to us, which I wasn't aware of in that delivery method you just, talked about. So how do these deals fit together within the broader Chill Connect strategy?
Yeah, so just to kind of zoom out and look at Chill Connect sort of with in a more holistic way, this is effectively the product of us having built a network, a black book, a team of people, some systems and processes and sales strategies for our own Chill Zero products and now our Chill Mix e-liquid products. Effectively, when we took that sales team in-house, we determined that rather than trying to compete with people who had much more by way of resource than we did, we should join them and we should provide our service, and that we should, as I say, use that lived experience of building our own brand to help other people and make money along the way. So what we are able to do is redeploy that entire infrastructure to support brands of all kinds and critically put them into the independent convenience landscape. That is our bread and butter. That's the most important channel for us. The reason for it is it's largely ignored. When people launch a brand, they, as we have done in the past, think we have to go into the major channels. That's an important element. You do want to be going into the grocers, the supermarkets, the symbol groups, forecourts. However, people typically find products in their local shop, the place where they buy their milk, bread, and newspapers. That's where they go day in, day out. They find their product there, and if they can get a product they like in that sort of venue, they will then continue to buy that everywhere they go. So we think that grassroots is extraordinarily important for any brand that's launching. We also think that it can be the best testing ground for any brand. And a lot of what we provide is not just a sales service, but activations, market data, the things that these brands really need in their early days that we would have wanted when we've been launching chill products in the past from day one, that illustrate and demonstrate that there is a product market fit, but also just generally that the product has legs, the price point's right, that the value chain is protected. Another side of that is that what we aim to provide for the retailer, while we're providing these brands with this complete end-to-end consultancy and execution service, is, a cash and carry, a Costco, a Booker's on wheels. We aim to make it very easy for your independent convenience retailer. These are not the chains, but these are people who own 1 to 15 shops, to not take a day out of their store, to not be off-site going to a cash and carry to try and buy products or in a cash market trying to haggle, but instead to have a trusted partner for all products eventually, but now especially in the nicotine category, where they can be recommended what's trending. They can be shown the value chain in a fair way. We can cut out some of that excess middleman slack. And of course, we take some as well. I can, won't beat around the bush. But it just allows us to provide them with a convenient delivery of the products that we know are selling and that are trending direct to their store. And that's the value we provide to that independent convenience retailer. So that's Chill Connect, I suppose, in a nutshell. We're going to continue to expand the portfolio outwards. I've got other grand designs on things that we will be doing over time as we grow closer to our partners, and certainly that will transform the face of the company. But really, Chill Connect is a very different beast to the one that was suspended in June 2024.
This is almost emotional seeing us back on the market. I remember sitting on a Zoom call with a certain American over a year and a half ago now. And yeah, we've come a long way since then. So first of all, I'd like to say well done, because wow, we've gone through some SHIT to get here. But now I think we have a really good business. What are you most excited about in terms of the change that you've seen in Chill and what's happened over the last period of time?
Well, thanks for that, Kevin. As you say, we've come a very, very long way. A lot of people for a very long time, and with good reason, will have written this company off, written the stock off, and thought that we weren't going to come back. And we've faced an awful lot. What I would say is, this is a business that is now a lot more diversified than it was before. We no longer live and die by the success of our own brand. That's a risky game. If you think about even the biggest brand groups out there, they launch and fail and fast fail brands all the time. They pull them from shelves. Look at, I think everybody can probably name products that have been discontinued. Fruit Polos, Cadbury Dream Bars, all sorts of things. That's the confectionery space, but there's more to it than that. And that's happening in the nascent spaces, vape, nicotine, alcohol, energy beverages, etc. All the time. People are either running out of money or they are running out of the ability to keep operating. So to give ourselves a diverse base of business, a basket of products where we are not just exposed to our own brand, but many, and we can be agile and pivot and do as we need is very exciting. In doing this, one of the things I'm most excited about, one of the partners that we've not spoken about is Relax. They're a Chinese originated but New York listed company. We announced them a couple of weeks ago. We are providing them with primary distribution support in the UK. And our aim is to get them onto as many shelves and into as many consumer hands as we possibly can. They have got a sales team that's acting on their behalf, but provided by us, that is dedicated to that mission. And what's very exciting about that is that we have got a vote of confidence there from a business that is very large, very well established in this space. They are a global winner. They will be a UK winner. And the fact that they have trusted in us and seen the potential that this business has, I think is enough, certainly for me, to think, yes, we've got this at least half right. It's consultative. It is, very focused on execution. And it's speed to execution as well. When we first met them, we took their products out on trial into the market, started selling it. They went like hotcakes, and we knew this was the right thing. But we didn't hang around. We didn't wait until they'd agreed some enormous fee with us to start delivering that value, because we believe that conversely with, potentially some others in this industry, you've got to show value to your clients. You can't, have them for 3 months, burn them with high costs and then move on to the next. I'd rather have clients for 3, 5, 10 years and really build around them and get closer to them. And that will happen for us. I think aside from that, what's exciting is that, we now have infrastructure. We will have a warehouse in the UK. We will have, and we do have an increasing headcount. And while that comes with obviously CapEx, it also comes with the ability to, put it bluntly, do things. If you have got a field team that are going into shops and stores and out into the field every day, there's an enormous amount you can do. There are lots of bolt-on services you can provide. And that's the way this business will expand, in many different directions. We've got skilled people. We're taking them on from, all sorts of different sectors, but largely they've been very experienced and have come from big tobacco. And they are really our first line of offense and defense for the business, but offense for the brands we represent in getting out there and getting out there at scale. So it's very exciting, and long may it continue.
Yeah, I mean, from the perspective of where you were to where you are now, obviously focusing completely at the minute on the United Kingdom in terms of the brands that you are promoting, and not ultimately exclusively vapes or pouches. I mean, if we look at chill.com, I see a massive opportunity there. So just tell us how you feel that could progress over the next year, 2 years, 3 years.
Yeah, 100%. As I've sort of telegraphed in our latest annual reports, and then our interim report, and then our second interim report, all of the things that we needed to get out to get back to market. Chill.com is a longer play for us because e-commerce is tough, particularly when you need to allocate a lot of marketing budget and you need to recalibrate your site. And I'll explain what I mean by that. So it's a longer term play for us. Chill Connect is certainly I wouldn't say the cash cow at the moment, but that's the high growth, fast growth right now. Chill.com, look, we're in a position where it was predominantly US focused in terms of what was going on with that site for quite a long time. And we're now in a position where we're trying to pull that equilibrium back, get to a point where our traffic is largely coming from the UK. Obviously, we've shut up shop for the time being in the States, so we can really focus. And effectively, that site needs more eyeballs on it. It needs more marketing, and that requires more spend. But those are things that we're doing. For the first time this year, we worked out a number of very intelligent and interesting strategies that would allow us to run pay-per-click PPC ads to Meta for our products. The restrictions on our products, because there's CBD on the site, because there's nootropics on the site, because there are menopause products on the site, quite stringent. It's not the same as selling a t-shirt, for example. And what that's meant is that we're able to test and learn and start pulling in the right crowd, the people who are most likely to convert. Over the course of the next few months, you will see chill.com shift and change and niche down into something that's slightly more specific than it is right now. The site that has existed for a little while has been very, very generic in terms of, look, it's wellness, or it's wellness made simple is the slogan we've used. Well, actually, we want to capture a market share, and that's not a case of being, something to everyone. But we do want to be everything to someone. And that someone, our core customer, is someone who, the antithesis of stress, is trying to chill. We are looking to stock products that will help people to cope with stress, both general bodily stress. And stress is on the body, it's their health, but it's also the mental stress that modern society causes. And those sorts of products, we think, are the top performers on the site at the moment anyway. But they're also the ones that chime with consumers. They're also the ones where if we run an ad that's more focused in a very specific niche, that gets the most interest, the most eyeballs, the most clicks. And so we're going to be running hard in the direction of what we're seeing from that data. It's all a data play now. There's lots of things that we'll be deploying over time. As I say, it's a longer term play, but that site and the positioning of that site will shift, I guess, 5 degrees in one direction or another. But that's how we'll see this evolve and progress. What you will see is that there are competitors out there who are doing things in this space, who are doing very well, and that's the blueprint that we want to follow. The examples I would give are health.com. Health.com is largely focused on highbrow wellness and health, and it's things like, they've got a multi-thousand-pound cold plunge tank on their site. That's not what we're all about. We're about being accessible, but they've done well out of that niche. Goop is Gwyneth Paltrow's site. They've done very well, and they're focused on that sort of luxury lifestyle end of the wellness spectrum. It's, funny scented candles and what have you. And our focus is accessible, quality, no nonsense, stress relief products, supplements, keep you empowered, energized, feeling good, balanced. That's the way that this will go. So that's chill.com. Things will continue to move in the right direction for that site. E-commerce is tough. I won't sugarcoat it, but things are moving in the right direction, and that's the critical thing for us.
Yeah, when I come over to England, we are going to be meeting with some AI individuals who are hopefully going to help in terms of that social media. How do you see the whole AI situation progressing in terms of how Chill will use it and how the world will use it, I suppose?
I suppose the macro is that I was at ShareStock last weekend.
You crazy person!
No.
And no, it was very, it was very good. It was very good. It was very insightful.
Okay. This is not an advert for.
It is no, it's not. It's not an advert, but I do think it was very, very good. And there was a lot of discussion about AI there, and Barry Downs spoke about it, Jim Mellon spoke about it to a degree. I think the takeaway for me was that people polarize AI. This is the sort of macro for the world. People polarize it. Either it's going to give us a utopia where nobody has to work, everybody has a universal basic income, and you can live and do your arts and things while the AI runs the world. Or alternatively, it will give us a hellscape where there's universal basic income and nobody can work, but equally we're sort of enslaved by some sort of demonic AI, end of the world, press the nuke buttons. And actually, I tend to think that what was said on that day was right, in that it's probably going to come right down the middle. We're dealing with large language models at the moment. People talk a lot about AGI. I've got some connections to building various AI products at the moment. And the reality is AI will be a tool. It will massively change and improve our lives in some areas, and in others, it just won't touch them. So it will change the world, but I don't think it's going to be quite as dramatic and sensational as everybody thinks. For CHLL, it's about efficiency. It's going to be data sort of analysis, data capture. What is it that we can do to better track our inventory when it's sat between many, many reps on the road? How can we forecast for example, inventory requirements? Our business now is split between a model where we purely provide representation for brands where they pay us a monthly retainer fee and we act for them and sell their product for them. And then it's the products that we buy and sell. And some are a bit of a hybrid. What that creates is a pressure where we are needing to continuously have a flow of inventory. And it's a cash flow challenge, but it's cash flow as opposed to cash status. And if we can better forecast for that, if we can know what the retailers want, if we can serve them the relevant products at the relevant time, everything should start to get a little bit tighter and come together in a way that we're able to predict. And it's those prediction models, which I certainly don't want to sit down and do. Maybe my FD Graham would enjoy it, but I don't think so. That's where we will see the best use of AI for CHLL, at least in the near term. And long term, AI sales reps, that would be great. But no.
I think ultimately AI is going to, we will put in the 555 podcasts that we've done on the Sunday roast, tell AI to create you, me, and Phil, and it will do it. I'm pretty sure 2 to 3 years down the line, that's what's going to happen in different industries. More interested, though, from the perspective of sort of CHLL.com, and will CHLL.com think about moving to having some sort of AI bot involved in that website? Because if I listen to AI people, then websites are going to be there and they're going to be used. But actually, are we going to be more automated than that going forward in the future?
Yeah, we are. And look, AI recommendation is a huge thing. Recommendation engines generally, and I've got some first-hand experience of this elsewhere, are really valuable, because what they do is they serve up something that is hyper relevant to the individual that it's serving it to at that precise time. You've got to have a quality vantage point over the customer, the user. But once you've got that data set and you're able to work out, okay, either on an affiliate basis or on a sales basis, this is what they need, you can then pull the trigger in terms of screening to them the right product at the right time, and your conversion rates go up. At the moment in the marketing world, we talk about ROAS, return on ad spend, we talk about bounce rates, but actually, I think relevancy rate is, or some sort of metric or measure of relevancy is the most important factor, because if you can show someone the thing that they want, the thing that they're looking for at the opportune moment, they will buy it and they'll keep buying it. So I think that's the critical piece. I think the other thing for us generally is that the way that this will change the economy is that we will move from the standard sort of career and job-based economy that's existed for many, many decades now and has started to shift into the gig economy plus. It will mean that I think everybody is offering a service almost on a contractor basis, and playing to their skills, saying, okay, this is what I can offer, this is what I can do for you, and selling that service. And what's good about that is that it means we can potentially be more agile with our workforce, more agile with the locations and geographies we're working in. You can pick up people, you can get them deployed into an activation in Essex one day and not need to try and lug the same team over to Cardiff the next. So I think it will have tremendous benefits over time, but of course there's a lot of upheaval to come with that, and that's for a government one day to manage.
Okay, so my last question in terms of Relics and Elf and any other brands, because I'm quite sure it's not going to stop here. from what you said to me on the phone this week, I don't know whether I'm speaking out of turn, but you can tell me, is you had lots of inbound inquiries after these announcements. So you are going to become that, one of the main suppliers, because these are big brands. Okay. So what magnitude of revenues, profit are likely to come from this? You can't answer this, I know that, but I'm asking the question anyway.
Yeah.
I mean, we're talking tens of millions of pounds likely for these brands, because they are very, very well known, and they're going to be used.
Yeah, absolutely. So I suppose the first thing to say is it depends on the category. We aim to very quickly now expand outside of the tobacco alternative and nicotine space, so that we have a broader grouping of subcategory products in our portfolio. And that will help us too. We've got some great ideas, and we'll be speaking about that in the not too distant future. But looking at magnitude here of what it means for us financially, the first thing to say is I think there are categories that will do better than others. The pouch category is not yet mature. The vape category is mature, or it's maturing. It's much better since the disposables ban, I will say that much. It's healthier. There's been consolidation. There are better brands. The consumer behavior it hasn't been completely rattled into the black market, which is great. It's going to take time for us to get there, but look at people in this space who are already operating. Our listed bedfellow Supreme PLC is revenues into the couple of £100 million. I think their EBIT on that is somewhere around, well, I think it might be even north of £50 million, but it's taken them a while to get there. They have a basket of products. It's batteries, it's tea, it's vapes, lots of different things that are quite diverse. That's obviously an objective for us, but it's a way off. There are others in this industry who, in the sort of vaping world, in their first year turned over a few £100,000 and are now turning over equally to 100, 200, nearly £300 million. It's about exposing ourselves to these high growth sectors. We've got to roll with the punches. We've got to make sure that we're able to finance and resource this properly. But, ultimately, there is a huge market in consumer products for us. We have found a sweet spot and a niche with the independent and the direct to independent convenience retail. We'll continue to grow that. And, I suppose turning then to the bottom line and profit, well, what does it look like? Well, it's hugely varied. Some products have very, very good margin. Others are volume drivers. And you need a good mix of both to open the doors to convenience retailers and then to make your money from them. But, my pure objective here, through increasingly close ties to our partners, is to drive CHILL to profitability. It's an obvious statement. It's a boring statement, because what person running a company doesn't want to do that? But the reality is, if we can get to that stage and we can make other things a free hit, then this will be a much more stable company and a different sort of prospect than what people have seen for the past 4 iterations: oil and gas, CBD, CHILL Zero, and now here we are.
Highland Natural Resources, we love you. My final question is this new vape product.
Yeah.
Okay. I saw this actually as potentially the biggest of the 3 deals that you've announced, because if this works and it has the ability to take out even some of the risks that people have with the other vape products, then it really could be an absolute game changer.
You're right. I'll say it won't be a vape product, and that's the most exciting part of this. If you've got something that can totally disrupt an industry as vapes disrupted tobacco and have stolen and seized that market share, if something else comes onto the scene and it's not a vape, it's analogous, but it provides something that we think is far superior in terms of certain qualities, health being one of them, then the opportunity globally is enormous, and we telegraphed in that RNS that this is not something that is going to provide immediate, near-term financial benefit. But we're getting in at the ground floor of not just a new exciting brand. Think about Red Bull and its precursors in Thailand. But we're getting in at the start of a brand new category. And if we can help to shape and define that category and be with the brand and help to carry that brand upwards and that product and that technology upwards, then there is just such huge opportunity for CHILL, but also for SIP. And, I wouldn't have agreed to join SIP's board otherwise. The focus there is on disrupting and rattling the industry as it exists today. Earlier on, you asked about AI. How will that change our lives? Well, this might not change everybody's lives, but we do want to, change the scene significantly. And, the financial benefit, the financial impact that goes with that is almost unquantifiable.
Indeed. Okay, Callum, well, thanks for your time. We look forward to speaking to you in the not too distant future regarding other announcements and other progress that's been made. And again, congratulations that Chill Brands is back on the market, and we have a company without two American directors, which I think is a very big positive.
Absolutely. Well, look, I can't comment on that, and nor would I want to. I think the better approach is, look, it's all future focused now, but we're in a much better position than we were. I think we have a more sound business proposition than we've had for a long time. And the proof will be in the pudding, but the near-term proof is that we are continuing to land brand partnerships. We're continuing to punch well above our weight, and we'll keep doing that.
Very good. Thanks for joining the Sunday Roast.
So let's move on to our third and final guest this week. We welcome Sapan Ghai from GreenX Metals. The company has just announced the remarkable discovery of a major historical drill database for its Tannenberg copper project in Germany. Unearthed in archives, these records date back to the 1930s and include 95 drill holes that originally laid the foundations for 3 Kupferschiefer copper mines in the Richtelsdorf district. This database, thought lost for decades, represents not only an invaluable geological resource, but also a significant saving in time and cost as GreenX advances its exploration work. We'll be speaking with Sapan about the significance of this discovery, what it means for Tannenberg, and how it supports GreenX's broader strategy going forward. Sapan, welcome back to the podcast.
Thanks, Phil. It's been a while since we've been able to talk about GreenX and the various guises it had in the past, but this is a cracking opportunity that I'm looking forward to talking to you guys about.
Absolutely, yeah. I mean, it is a fascinating story. Obviously, I've been out there and visited some of the areas around this, the Richtelsdorf district, and also been to the fantastic museum and had the tour from the man himself on the ground. I think it was the Heimat- und Bergbaus Museum in Erbendorf as well, which was fascinating. But let's if you could start by explaining how GreenX came across stumbled upon the Tannenberg copper project, and also a little bit about this 1930s drill database and why it's such a significant find for the project.
Yeah, so let's talk about the history here. Just to paint the picture, obviously most of your listeners will know me from Sovereign Metals. Sovereign Metals is one of a number of companies that myself and my colleagues are involved in. It's quite funny. We're quite well known in the mining industry in North America, in Australia, dare I say even Africa, but very, very not so well known in my own backyard of the UK. So if people have followed what we've done in the past, they'll understand that we have a bit of a reputation for finding tier 1 deposits, essentially mining projects for quite early stage that require engineering and designing into something that can unlock the inherent value in those projects, but also ultimately in most cases end up in the hands of the bigger miners, the BHPs and whatnot out there. So with Tannenberg, we were approached a few years ago. We ran our rule across Tannenberg, which at the time was looked to us as an interesting geological find. We knew that it was brownfield, so it had been mined in the past. We knew that it was quite shallow copper there. Now, I'm saying shallow in terms of European shallow. We know that, for example, KGHM mines in Poland at depths of 1,400 meters deep. This is about 350 meters deep. So shallow in inverted commas, shall we call it. We knew there had been some work done on it, but we didn't really know much else. We liked the proposition that this could have the potential to be a tier 1 copper deposit in the center of Europe, right? I mean, that kind of ticks a lot of boxes for us. So what we did was we started unlocking some interesting archival data if we look at what happened historically, the Tannenberg project and the mines that surround the Tannenberg project, or the old mines such as the Rickelsdorf mine. Now, these mines were in operation till the 1940s. At the end of the war, the mines ended up in West Germany. All the miners, the data, the documentation, the mine plans, all the geological information all ended up in East Germany. And all that, over a couple of generations, all that knowledge was lost to the annals of time. And it's only now that we're piecing all of that together. So this week's RNS kind of delves into that. I'll give you a bit of a kind of timeline of what had happened since the 1940s. So there was some drilling in the 1970s, but that was for oil and gas, really, more than anything else. Oil and gas, a bit of scientific stratigraphy drilling as well, and 47 holes were drilled, and we found those in a government archive. We'll be relogging and assaying those. That's quite interesting because 18 of those 47 holes have never been assayed for base metals or precious metals, right? And why am I mentioning precious metals when we talk about copper at Tannenberg? Well, we also know that horizon that is mined at Tannenberg not at Tannenberg, in that Kupfer-Schiefer belt actually has quite decent grades of silver. I mean, look, KGHM over in Poland mined effectively the same geology, and they're the world's largest or second largest silver producer, and that silver is just a byproduct of their copper production. So we know it exists there. Anyway, so look, those 47 drill holes were done, 18 of which have never been assayed, and they were done over 5-meter intervals. Now, I'm getting a bit scientific about it, but what they were targeting is this horizon called the Kupfer-Schiefer belt, and what that's copper shale or copper slate. It's always been high-grade copper. You easily find 10% copper lying in there, but it's about 30, 40, 50 centimeters deep. But that's what the old timers mined. And they knew that existed, and the copper from there is easily recoverable. What they never realized, and what we know now, because this is what KGHM is doing over in Poland, is actually the limestone above that shale horizon and the sandstone below also contains copper. And, instead of looking at 40 to 60 centimeters, we're now talking about meters worth of potential, copper-rich mineralization here. So after we found these drill holes, we then ended up finding a 1930s database which contained an additional 95 drill holes, and that's what we announced this week. The core doesn't exist for those drill holes anymore, but we are finding the geological documentation for those. What's key for us, and this is the point in finding all this information, if we started from scratch with Tannenberg today and we needed to drill these holes and assay them and log everything, it would take about 7 years, at a guess, and it would probably cost us 50 million euros to do so. And we've got all this information that's just been lying there from historical archives. So now it's a case of let's get into that information and what can we find out about Tannenberg that we didn't know until recently.
Yeah, and I believe that, so obviously, as you said, 95 historical drill holes, you're going to obviously be poring over that information, and you mentioned the sort of a work plan in the RNS, but there was a grant, I believe, wasn't there, in previous RNSs? Do you want to tell us, will that be applied to researching this, looking at obviously not the assays on these, but from the previous assays you have?
So we won the BHP Explore grant, which is $500,000, which is obviously we're using to pay our way in exploring Tannenberg. It is a grant, so there's no equity dilution or anything that happened at that point in time. The big boys like the BHPs of the world, they look to the explorers, the developers, the guys on the ground licking the rocks to find the next big thing. And usually, if they like something, they tend to dip in and out of these big tier 1 potential projects.
Sure. And the announcement, I think, noted that the drill holes originally underpinned the development of, I think it was 3 Kupfer-Schiefer copper mines in that district. How does that historical context influence your view of the potential scale and opportunity that may present at Tannenberg today?
Yeah, it's interesting. Look, we didn't know the World War II history of the mines until recently. We didn't know how the National Socialist government of the 1930s and into the 40s actually mined and managed this. But they had enough documentation that they opened up 3 new copper mines in the area, built a big smelting complex, and they're all connected underground and overground cable cars. And, they had enough confidence in the geological data to do so. Copper is quite important when you're fighting wars on all fronts. So you could only imagine at what pace they were building all of that. And look, you guys have been there. That there's rail and roads all over the place around that place. It's not in the middle of nowhere. It's very much connected to the European transport network as well. And there's a reason that rail and roads exist there, because they needed to get that copper moving.
So Sapan, when we visited these places, and I'm not even going to try and pronounce any of them because I'm absolutely useless about pronouncing names. So we'll just say GreenX area. We visited it, and there's obviously mine shafts already there, and there is lots of infrastructure that was already done because the Germans were going to use this, at wartime, as you said. How wide is it? I mean, I know we've talked about it, like there's high-grade copper in 40 to 60 centimeters, and then, maybe 10 meters above, 10 meters below, or whatever. But over what area could this span in terms of that geological sort of landing of the copper / silver?
We don't know. We don't know at this point in time what the extent of that mineralization could be. What I can tell you is we did announce some AEROMAG results as well earlier this week. And in those results, we basically made the point that the geological structure that defines the European copper belt, essentially all the big copper mines and deposits that sit within Europe, all align across the top of this geological structure that's many thousands of meters deep. The AEROMAG survey told us unequivocally that our license area is above that same structure. So we can quite easily expect that copper at Tannenberg probably flows through our license area and into what we call Tannenberg 2, which is us having pegged even more land around the original Tannenberg area.
How big is the area that you have already got, regardless of what you've pegged?
I don't know the answer to that, mate.
Okay, but it's a lot of kilometers. I mean, we drove many kilometers around this whole thing.
Yeah. Look, it's not. As I said before, we're not in this for little projects, right? The thing is, if you're going to look for, and I think our mutual friend Rick Rule says this, if you're going to look for projects, you might as well look for big projects, because only big mining projects can give you big returns.
Yeah, absolutely. So from the point of view of these other companies that are producing copper and silver on this belt, if you like, what sort of levels of copper do they get, and silver, grams per ton? Percentages.
The most obvious one to look at is KGHM, and KGHM is something like it's always in the top 10 of copper producers, and it's always in the top 3 of silver producers in the world. Bearing in mind the silver is just a byproduct of the copper. So we're talking about the potential for a significant player in the copper and silver.
Yeah. Well, silver's on its way to $43 an ounce now, so it might not be such a small play if it hits $100 an ounce, which I think is where it's off to. But anyway, that's another story. So tell us about the geologist who I want to actually get on the podcast anyway, who has a lot of experience. We met him when we were there.
Gregor is our geologist.
Gregor, the very
Look, he's he's done everything from academia to actually discovering a number of copper deposits around the world, including in South America. And he had worked in and around Tannenberg academically since I don't want to say his age, but well before I was at junior school, shall we say. And he's convinced of the importance of Tannenberg here. I mean, he gets it. He understands it. And you should get him on, and you should hear the stories from him that he has of the many tier one discoveries that he's worked on and how this fits into that portfolio as well.
Yeah, I mean, well, the good news is that we haven't touched on is that this drilling, these cores that you have, you said it would take years, which is true, but also it would cost around 25 million euros. So that's 25 millions of euros of value, which you can almost add to the balance sheet of spending that you don't have to do. Is that a nice way of putting it?
Yeah, and look, that 25 million euros is really just drilling those 95 holes. Once you've logged, assayed those, plus the 47 from the 70s that we've had,
archive.
you're talking about 50 million euros in total.
And then presumably you're still combing, because basically what seems to have happened is that Germany gets split into two after the Second World War, and then all of the data got lost behind the Iron Curtain, right? So presumably you're still trying to hunt down more data. There's possibly more out there. Is that a fair assumption?
Yep, absolutely. A lot of the work we're doing is, rather than digging into rocks, is actually digging into libraries and archives and microsheaths at the moment, and understanding off the back of those what people already know about this. As we've just made the point, it saves a lot of time and effort.
Yeah, well, it sounds like I've got some weekend work to do. There's nothing like, because honestly, I mean, it's surprising. A lot of the archive stuff, you'd think it'd be online. A lot of it is paper. You've got to physically go to a building, go down into the dungeon, be granted access. Getting access to a lot of this stuff is the hard work, isn't it?
Exactly. It's not easy just turning up and trying to take a whole bunch of geological documents that look like pirate maps.
Yeah. It's super.
And saying, I'll take these for now.
You'll be there in a month or two. Like, oh, I'm sorry. There's a Mr. Archer seems to have acquired these papers. But look, it looks really promising. But I think the key thing, I mean, if you look at the historical production, 416,500 tons of copper, 1,050 tons of silver. Clearly, there's copper and silver to be found. But I guess the question is, okay, so you're looking at these historical assays, you're looking at these drill cores. You've got this exploration data set basically for 3D modeling. And at the moment, the idea is you're trying to get drill targets for new drilling.
Yeah.
Is this what we're now doing?
Yeah, absolutely. We want to start, shaping this thing out and figuring out exactly what has been mined in the past and where they stopped. We kind of have a good indication of that. When we have all this data, it will give us a better understanding of just the geological scale and potential of this thing. And then obviously at that point, we start talking about potential exploration targets.
And when you say exploration targets, if you had to guess how much copper is out there, ballpark figure, what would you hope for? Can you put a number on it?
I probably shouldn't put a number on it, but I would hark back to the fact that what interests us as a team are tier one deposits. What do I mean by that? I mean deposits that are the biggest of their kind or close to the biggest of their kind that have been found over the past decade or 2 decades.
That was a very good politician's answer. We'll come back to it in 6 months or so. It's tricky, isn't it? I mean, the other thing is, because so much of this is, historical cores, and it is a brownfield site. When you're talking about kind of exploration, is the first thing that you would do, would you go drill holes very close to the previous historical ones to check that the assays are accurate, or would you do step out straight away?
No, look, we'd have a systematic approach. We'd need to have a little bit of confidence in what we found in the archives. Remember, we are assaying some of the results ourselves and logging those for those 47 holes. So we'll have data immediately from those. But I don't think we're not in the game of trying to just find the biggest. We want it to be economic as well, right? So for us, it's a case of let's tell our investors and potential investors what we are finding, and then build our and their confidence in the project systematically from there on in.
And then we're talking about this mid-European crystalline zone, right? MECZ, or referred to as Kupferschiefer, which I don't think anyone can pronounce properly if they're not born in Germany. But okay, I mean, with the grades between sort of 0.8 to 1.2%, what can you describe this? What kind of copper is it? What kind of mineralization is it? Is it easy to process it, for example?
It's sediment hosted, right? So yeah, easily processable. Within the shale itself, as I said, the let's call them the previous miners there. They were easily hitting grades of 10%, which is why they didn't think about looking above or below that shale horizon. Why do I even care if there's 2% or 3% or 4% copper above and below this 10% kind of concentration? And back in those days, the way you'd mine this thing, since the early 1900s, you send a couple of guys down there with pickaxes, and we don't do that anymore. So it's a lot easier to be thinking about mining that entire horizon with the limestone and the sandstone involved as well.
Well, it's funny, isn't it? I mean, if you look in South America, where the copper grades are going lower and lower, some of the mines have been going on for decades and decades. There's tons of exploration they've done where, like, say they did it in the 70s or the 80s, they go, oh, this is just rubbish. We don't care. We don't care about like 0.7 or 0.6% copper. And now they're coming back to go, hang on, this is actually now massively economical. Because the major discoveries for copper, yeah, there's like Oyu Tolgoi, like there's one or two, but actually like proper tier 1 discoveries, there's not many of them comparatively.
Yeah, and people have built very successful businesses essentially processing tailings. We used to throw this stuff on the dump. It's only 2% copper, get rid of it. And now, if you find 2% copper
in tailings, you don't even have to mine it. This is fantastic news, yeah. But I think even just obviously that's going to be a problem kind of just in general for like copper demand. But let's say kind of looking at like the timeline, for example, you will obviously have to do things like mag surveys and 3D modeling, and to be honest, the stuff that is necessary and required and makes your drilling targeting much more accurate. How long do you reckon it'll be until you start doing your own drilling, potentially? And then beyond that, if you do find a tier 1 deposit, how long would it take to get a mine in Germany? It is brownfield and the infrastructure is there. How long would it take to get a mine up and running?
Look, it's hard to put timelines on stuff, and this is going to be another politician's answer around it. But let's see what those archive drill holes, what information they give us. I guess the opportunity here is you as with any exploration opportunities, there's potential for high upside. There's potential that there's actually nothing really that interesting here, but all signs seem to point to the fact that this could be quite an important and, dare I say, strategic asset for Europe going forwards.
So it's my last
Sapan,
question.
that was such a political answer.
Such political. That's beautiful.
I'm not buying it. You're extremely excited by this.
I've got one last question, right? Okay, so and then I'll leave it. So you say strategic. Is this going to become a European Union strategic project? Possibly. And I know I'll get a politician's answer to that, so I almost didn't want to ask it. And then the second question, like Sovereign Metals has that joint technical committee for CASIA with Rio Tinto. GreenX has BHP Explore Fund funded 100% of the recent survey. Do you think BHP are excited enough about this at the moment? They want to continue to be involved.
I can't answer.
BHP have said nothing. BHP have said nothing to us about not being involved in this project.
Ah, wonderful. That's an excellent answer.
So it's what they don't say, basically.
I just lost the point sometimes.
Great non-answer.
Well, it's funny. I had this sort of list of questions. It's like, can't ask that, can't ask that, can't ask that.
Look, I mean, anyway. You've got to understand. We are, we do our business on the ASX and sometimes on the TSX or NASDAQ, and we fully regulated. We can't go out there and start talking about, let's say, I couldn't tell you that this is a Mount Everest of copper under the ground of Germany, for example.
This is the clip we're going to take for Twitter and TikTok. Fantastic.
Yeah. No, but having visited it, it's over an extensive area. We had to sit through an extremely hot room of presentations about this shale copper situation and the fact that we've now discovered it's X number of meters above and X number of meters below. And it is over many, 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 many kilometers both ways. So the potential for this being a massive discovery of copper, and I didn't realize the silver, is definitely there. Otherwise, you wouldn't have got the grant from BHP. BHP only hand out, I think, 5 of these a year, is it? I know East Star Resources got one last year for their copper. It was porphyry copper in Kazakhstan. I know you guys have got one. So, they don't hand them out willy-nilly. They have thousands, if not, well, hundreds anyway, of things that they plow through before they give the grants. And then they watch them. There's no handcuffs with the grant, is there? It's a grant, and if they want to deal with you, they deal with you. If they don't want to deal with you, they don't deal with you. So
yeah, look, I think the potential for finding, I say finding, but remember, this is brownfields. This has always been there. It's just, as I said, lost to time. But let's say rediscovering a copper deposit of size in the middle of industrial Germany. I mean, that's the holy grail here.
Okay, well, I think on that note, we'll say Sapan Ghai of GreenX Metals. Thanks very much for appearing back on the podcast.
Much appreciated, gents.
And what I would say as my last comment, Sapan, your Sunday roast food, I finally tasted, didn't I, when I was with you in the summer.
Yeah.
And I can honestly say, what was the name of the place again that we went to?
The Soho Tavern.
The Soho Tavern, which a strange name for it being in a very picturesque English village in the Midlands. But wow, the food was amazing. We had lots of stuff, and it was very, very good.
Well, you're welcome back anytime.
Very good. I'll take you upon it.
Okay, so let's have a look at some of the movers and shakers of the week. The best mover this week was Atlas Metals Group, AMG is the ticker, and they announced an update on the proposed acquisition of the UPSA. Tiny 1.5 million market cap before it was signed, this non-binding agreement potentially by Universal Silica Aluminium, PA Jones, to massive reserves of special material silica. I mean, I don't know if you saw the news, but I think that effectively the deal would value the coal, or the shareholders would end up with about 3% of the enlarged company, and then the UPSA shareholders would own 97%. But it was a transformative RNS, and it certainly moved the market cap of the company up. I think it was around 5 million market cap by the end of the week, rising from about 8p to 40p. But what did you make of that RNS?
I mean, obviously, it's a transformative RNS. It was really great for the company. I think the question is, if you're looking at it kind of like, we've now had that kind of like that sharp rise, and now it's come off a little bit. Is it going to rise again? Is it not? And basically, how is the market going to value it? Because there's a difference between this, this asset that they have is worth X amount of money, and the market assigns a discount to it. And we see this all the time across that junior resource. And I guess it's unless you spend a lot of time analyzing it, it'll be very difficult to know, what will the market value it as. But an incredible good deal for them overall.
Yeah, absolutely. ImmuPharma IMM was the next best mover. I think we talked about this one last week, didn't we? And obviously we spoke to Sebastian and Tim at IMM regarding this, the filing of the new patent application for the P140. Sebastian was appointed the CSO, and I think it was Laura Ambrosino as head of research. Fantastic run for that stock. What did you make of the moves?
Well, I think it's pretty simple, right? I mean, when we spoke to them, Tim in particular was making clear they're talking to the majors. They're talking about getting a deal done and over the line. At which point, regardless of the rise that we've had so far, there'll be a lot more to come. I think it's as simple as that, really. I think, particularly in pharma, when you're going through like clinical trials, a lot of people buy at the very start, and then it takes a long time to rise and rise and rise. But if you buy just before deal making, you can just make a lot of money very quickly. And then it's on Tim to get that deal signed and over the line.
Sure. 80 Mile as well, another one that we talked about in the past, up some 60% on the week after news that their 30% interest in Jameson has been valued at $92 million. Interesting one. We sort of, Oilers are kind of falling a bit off the kind of radar of investors. Obviously, we've had Buccaneer Energy on this week, which is an extremely, looks like a steady eddy in terms of the Texas wells. But what do you make of this 80 Mile news?
There's a few things here, but I think the key thing for me is that this 30% of Jameson valued at $92 million, right? Rod McIlroy, the executive director of the White Flame, and founder of the White Flame concessions in Greenland, he was talking about how, people should see what the parties have described Jameson as. Those interested parties have used figures which, in his opinion, are far more accurate and have not been constrained by overly cautious consultants or advisors in the UK. Now, given the history of ATM and its previous iterations, are those cautious advisors actually going to be more accurate than what these current people are saying? I don't know. I'm sitting this one out, but obviously, any company that is going after oil and gas is going to be very high risk, very high reward.
Sure. Kendrick Resources as well, they were up some 50% on the week. Didn't see any sort of significant news from them, but we do see these movements. In terms of the shakers, not a great week for Angle. They were trading down some 53% after an announcement regarding board changes, certain people stepping down from the board and positions on Tuesday. And they also saw their interim results for 6 months end of 30th of June, with revenues down and losses increasing. So there's a few in the pharma play that have been hit quite hard, hasn't there? I think Gene Drive a bit, they moved up a bit, but they finished down on the week. And we've seen other companies in that sort of pharma industry that are trading at very low valuations.
Well, I think it's a winner-takes-all mentality with the pharma, right? And it is also just winner-take-all in general when you're doing any kind of biotech, because either against all odds, you develop something that's worth a hell of a lot of money, and then your share price basically goes to the moon, or you spend a lot of money developing something that's, in the end worthless, and there's no in-between area, and the market's trying to guess which one it is.
Sure.
And I think the problem is that when you have stocks like ImmuPharma, for example, where they're close to monetization, they suck all the rest of the capital from the sector for a short period of time, for obvious reasons, because people want to get in before the rise.
Yeah. Empire Metals down some 35%. Any news that we should know about, Charles, on that one?
Well, one of the directors has bought a little bit more, which steadied it a little bit. I mean, my perspective on Empire remains the same, which is that despite the very large and significant rise in market capitalization, the company still has a significant amount of work to do to prove that the titanium in their deposit is economically viable. And this is the key thing, right? Even though they've been doing a lot of work to make that happen, it's had a massive rise, and you're going to see the bubble come off that. Where it goes next is anyone's guess, but I think we'll see, and I think you have to wait to see what the CEO thinks next.
Yeah. All right. Well, any other stocks, Charles, that you want to mention this week that have sort of come onto your radar? I mean, I know we talked a little bit last week about one of your two picks, which was Defence Holdings, and they certainly moved up a little bit on the week. There's been about 3 announcements. There was the announcement of the Marshal Lord Horton of Richmond as a former Chief of Defence Staff, one of the UK's most senior military leaders of modern times, the Field Marshal there, which is the highest rank in the British Army. And there was also an announcement of the fact that the Vice Chairman, James Norwood, has also been appointed to the NATO Coalition of the Willing, which was obviously really well-received news. And then there was the final on Thursday, the news of that they announced the first AI product built in information operations named Project Ixian, I believe. So what do you make of those sort of three news announcements?
Yeah, I mean, well, this is something I highlighted a while ago. I mean, but it's worth bearing in mind we're up, despite having come a little bit off the froth, we're up 300% over the past month. This hyperscaler that we're dealing with is, by all the contextual clues, almost certainly Google, right? So you're developing a defense product in the misinformation area. It's being developed, in a joint partnership with Whitespace, with our CTO Andy McCartney, who was founded the Microsoft Ventures outfit. And you have this kind of situation where, especially with small cap stocks, there's always like a huge spike when something gets catches the attention of the public and of the investing public, and then it comes down a bit. And then the question is it then going to recover onto new highs, or is it going to kind of settle around the sort of between 1 and 2p mark? I think there's a lot more in this to run. They're talking about monetizing this product in December. You have a second product coming along as well. But more than anything else, I think that when you're talking about trailblazing stocks, for example, the Bitcoin treasury companies that we talked about a few months ago, you had Smarter Web Company jumped into the UK scene, and then Coinselium and then various others came in. And so you have multiple companies trying to attract the same capital, right? And it's the same with the helium stocks, with HE1, and then more came in. And various others, basically whenever there's a new theme, then there's copycats. But with Defence Holdings, because you need to have your tendrils in the MOD to develop products, and because you need a hyperscaler on your side as well, and because you need the technological capability to develop these products, you won't see any copycats in the public market, because they have an economic moat of defence.
Yeah.
So it'll keep going high.
Okay.
Yeah, what I want to talk about is Conroy Gold, who managed to raise significant funds. I think it was Friday, and then broke it all at 10p, having come basically from about 4p over the last while. But now I think they're going to be a secure situation, valued at £6 million at 10p. And I don't know how it's not worth like 5 to 10 times this amount, to be brutally honest with you, but such is life. But I think now it's got a very solid base. Okay, all the debt's gone from the company. They've got probably, I think, by the time they announce the raise that's happened was happening with Peterhouse as well, they could have circa £1.5–2 million, and
can't say much more. I mean, it was a non-brokered deal as well, no broker involved, and it was at a premium as well. So what's not to like?
So I think it's a no-brainer. I also say that the Buccaneer oil one that we spoke to Paul today, I think you really need to all have a good look at that. It's very simple. It's only worth 2.5 million or less than 2.5 million pounds, and I just cannot see how that isn't going to multiply itself over the next number of months and years. And it's just one of those that you should stick a bit of money in, I think, and leave it, because I think it's just going to keep growing.
It's a good one, yeah. And Charles, Rockfires have had a good week. Just fill us in on that. They're up some sort of 47% on the week. So, talk us through that.
There's two. Well, obviously drilling started, and you've got this amazing deposit as well. But for me, it's pretty simple, right? It's ACAM took a position relatively recently. ACAM does due diligence on a level that, not many others do. And every time they get involved in a publicly listed stock, every time, I'm reminded of a quote, 60% of the time, every time, that stock then goes on a bit of a tear because they position, then other high net worth investors position off them. And you can see this in, many companies. Guardian Metal, for example, this is one of them. Power Metal is coming up a bit now. Amarok has had a decent run. It's come back off this year. And then others I could name, but they're not tier one, and so I probably shouldn't. But basically, it's as simple as that for me. If they get involved, then the stock goes up, and it's very easy trade.
Cool. Did you see the news recently that Larry Ellison has overtaken Musk as the world's richest person? Obviously happened after Oracle's very strong quarterly results, and these 7 of the multi-billion-dollar contracts pushed his fortune close to $400 billion. Musk is obviously facing pressure now as Tesla hasn't introduced a major new mass market model since 2020 with the Model Y, and the company is losing some market share to competitors. The development set stage for broader questions about innovation and competition in the tech and auto industry. So Oracle's kind of AI stance, that we saw the shares up some 40% in the last week. What do you make of that? And they're saying that this is just the start of it.
I think there's, Defense Holdings actually through Whitespace, there is actually a connection there to Oracle, which if you want to dig into it is quite interesting. But I think that my concerns with Oracle in particular is that when you're looking at their the way they've booked revenue and what they're talking about, it might be the case that this one-off significant rise may be a one-off, and then the next quarterly results, they won't be as impressive. But I guess we'll see. I think in terms of Musk and losing his number one spot, this is for these guys, it jumps around year by year, who the wealthiest person is, and I think when you're talking hundreds of billions of dollars, it probably doesn't matter too much. I think his pay, actually negotiating a pay package which would pay out, I can't even remember, something like $1 trillion or something insane if Tesla does what he thinks it's going to do. And the people laughing about, they're saying, no, it will never happen. They laughed at his last pay package that eventually had to get struck out with court because it was so big.
So did you see the pay deal that he's waiting on? Yeah. So if the company gets to an $8.5 trillion valuation in the next 10 years, Musk is going to get $1 trillion bonus.
Yeah, that's what I said. But I think people say, that's not possible. They're not pricing in the possibility that the US dollar becomes less and less valuable. It's not actually $8 trillion in, $1 trillion
real
world value, $50 billion in that amount of time. Yeah. But on that bombshell thought, I'm sorry, I've got to pop off. I've got children to collect. But
no worries. Well, Charles, thanks for coming back on, and we'll speak to you soon. Okay, so Kev, anything else on this week? I mean, I tell you what, I did listen to it. I think I sent you the link to it. It's a really, really good podcast with Tucker Carlson interviewing Sam Altman from the CEO of OpenAI. And he talks about the ethics of ChatGPT and about his belief in God or in his, what are his beliefs. He talks about one of his colleagues who was murdered or he was meant to have committed suicide, but it's under effectively conspiracy. And then he talks a little bit about his relationship with Elon Musk. I thought it was a really interesting 55-minute interview. I don't know what your thoughts were, but it was.
I haven't listened to it yet, but it's on my list of things to listen to. Yeah, Musk was very harsh with him in terms of he believed that he was going to use this AI in a very detrimental way. I think AI is a massive risk to the world. It's as simple as that. But one of the things I do quite like that seems to be happening now is that AI is hopefully not going to be completely dominated by these big players.
Yeah.
With the independence of the subnets. We've got Astrid's got a subnet in the UK. We've got Tiger Royalties have got a subnet in the UK. And all of these are going to create independent AI. And I think further down the line, and it's not going to take a long time, that a lot of people are going to move down that line because they're not going to want to give their data away effectively to OpenAI or to, any number of the other ones, Grok, whatever, because that's basically what you're doing. You're giving your data to make it more intelligent. So is it better that, the large language models basically take over and control everything? Or should we have something that is also independent? I don't know.
I think we're just at the beginning. It is scary. And I think we're at the beginning. I was looking into the different models of like the different sort of development phases of artificial intelligence. You've got AI, which is where we are now, right at the beginning of the journey, where it's based really on rules and a set of, it's what it'll do, what the master tells it to do. Okay. The next level is AGI, which is artificial general intelligence, where it actually becomes almost human and sentient in the way that it can make decisions for you. It can have a rational discussion with you that is not based on what it's been fed and all the rules and morals. And then you've got something called ASI, which is artificial super intelligence, where it's actually, it's doing things that humans can't do, like working out cures for diseases. It's coming out with incredible life-changing results that humans could only think, dare to dream of, if that makes sense. So we're right at the beginning of the journey on it, but I agree with what you're saying. And I think you need to listen to that podcast because it talks about the moral and ethical dilemmas that Altman has had to go through. When he started this project, he was very reticent to put it into the public domain because he had he said since he's launched it, he's not had a night's sleep in it. He's not had a clean night's sleep because he constantly worries and stresses about it. But Microsoft wanted to monetize it from the get-go. Everybody who was going to be first to market. And that's why him and Musk fell out, because he thought that he was rushing it all. He wasn't involved. It wasn't going in the direction that Musk wanted. But yeah, very, very interesting debate about the whole kind of ethical side of things. Other than that, we've got a busy week ahead. We're off to the Alps, aren't we? Swiss Alps, to do a little bit of wrecking over there. And anything else you got planned for the week ahead?
No.
Going to be chilling out, I think. Hopefully some podcasts later on next week, and that'll be it.
Good. I guess on that note, we'll say thanks for listening. If you do like what you've heard, please subscribe, hit the bell icon for any further notifications of future episodes, and have a great weekend all. Season 11, it's just the beginning.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.